Hi, I'm Link, and welcome to Link Life Money. And this is Marvin. Marvin's looking to buy a house, but not just any kind of tree house. Marvin's looking to buy a house for him and his family. This takes me back to when I bought my first house. I was 26 years old. I was working two jobs. I was able to qualify for a 35-year mortgage with 5% down. I always knew that I wanted to stay in the same city, and I also remember my dad always saying to me, "Don't wait to buy real estate. Buy real estate and wait." So for me, this decision made sense. At the time, I knew I wanted a house for myself and my future family. Mortgage debt is generally considered good debt, as real estate prices tend to increase over time. Still, one has to be prepared that prices could go down for a short period of time or even for a very long period of time. Potentially, they could go down below cost. As with any investment, there's always a risk that it could go down to zero. In my opinion, it's best to play it safe and prepare your budget to handle any type of huge loss if you decide to purchase a home by getting a mortgage. A risk example for what's happening in the Toronto housing market is you can see that average home sale price in Toronto peaked on February 1st, 2022 at about 1.3 million. Now for June 2022, it's down to 1.1 million. That's down $234,142 since the peak of February 1st, or down 17.6%. That's a huge amount of money. I can't imagine how the people that bought at the very peak must feel now, being down that much in such a short period of time. This is the Toronto real estate price history chart since the year 2000. I specifically chose the date to highlight of being July 17th, 2002, which is about 20 years ago. As you can see, a detached home back then cost $300,760. You can see that the majority of people over a long period of time in Toronto real estate have made a significant amount of money. I'm not saying that this trend is going to always continue. I'm just here to show you an example. Purchasing a home is a personal choice, and it depends on a person's personal life. If they know they want to travel and move around a lot, then purchasing a home might not be the best choice for them. If you do know that you want to purchase a home, you should go to a reputable bank or a mortgage broker and find out how much you qualify for. Royal Bank states that the gross debt service should be no more than 30 to 32% of your gross annual income should go towards mortgage expenses such as principal, interest, property tax, heating costs, and or condo fees. Gross annual income means your income before you pay taxes. Let's look at an example. I put $400,000 for the mortgage principal with a 30-year mortgage term at 4.3% interest rate. The mortgage works out to be $1,971 a month. Property tax was estimated to be $305, home insurance $120, utilities $350, HOA fees $20. Total monthly housing costs was $2,766. If we follow the RBC guideline, it states that it should be between 30 to 32% of our gross income, so of our income before tax. So to calculate that, we just cross multiply and divide. So 2,766 times 100% divided by 32%, and that equals to $8,643.75 a month for your gross monthly household income. That's what it needs to be to qualify for this $400,000 mortgage. Now, to get the yearly income, you can just times that by 12 for 12 months in a year. So $3,725 is the gross yearly household income needed to qualify for a $400,000 mortgage under this example. Once you figure out how much you qualify for and what best works for you and your budget, you can begin the house hunting process. Just because you qualify for a certain amount doesn't mean you need to max out and spend that certain amount. Make sure that with a budget works for you, the numbers work for you, and that you have a lot of wiggle room in case interest rates go up or in case unexpected expenses occur. A single family detached house can have lots of advantages. Quite often, there are no condo fees. This is not always the case. You want to double check with a realtor and with a lawyer. Often you're able to follow your own rules and not the condo board rules as long as they are within the law. It may also appreciate more in price. This is not always the case, but in some areas, single detached houses have appreciated more than other type of properties. Generally, you don't have to ask for a parking pass for visitors. Visitors can park on the driveway or in the street in front of your home. And always, always, always get a home inspection before you decide to purchase any type of property. Things to consider. Is it near a busy road? Is it near a landfill? Is it on or near contaminated land? Is it near a compost recycle facility? Is it near power lines? Is there a homeowner association fee? If so, how much is it? Are there condo fees? If so, how much are they? And is it in an area that is not able to be insured? There are some areas that are prone to flooding that insurers won't offer insurance for. So you need to make sure that your property is able to be insured before you purchase it. Please think about it. It's a big decision. It's very important to have a reputable lawyer gather and review all documents. If you purchase a condo, you want for experts to check to see if the condo's financials are in good shape. You also want to get a home inspector to inspect the apartment as well as the whole building. To be honest, condo purchases kind of scare me. I've heard many stories in which people have lost all of their money after purchasing a condo that ended up having structural issues and was deemed not safe to live in. Yet the person was still responsible to pay off their mortgage or claim bankruptcy. Also, a condo board can issue special levies for repairs that are needed. This means condo owners would have to pay additional costs that could end up being thousands of dollars depending on the expense. You can probably tell, in my opinion, I feel single family detached houses are generally a safer investment and gives you more control. But I know that everyone's situation is different and that not everyone is able to afford to purchase a single family detached home. Everyone needs to make the best decision for themselves. Just know that any real estate deal is a huge decision and can have a major impact on your cash flow and net worth. Please always consult with a reputable lawyer and home inspector. Let's take a look at some mortgage rate examples. Now, variable rates generally go up when the Bank of Canada or the Federal Reserve in the United States raises rates or lowers rates. Right now, TD prime rate is 4.85%. So they're offering a 0.5% discount. So their 5-year variable closed rate is 4.35%. Now, if somebody wanted a 5-year fixed rate, they could get the interest rate to be locked in for 5 years at a rate of 5.24%. In the United States, there are 30-year fixed mortgages so that the interest rate stays the same for the whole 30 years. So those type of mortgages, it's way easier to plan your budget. In Canada, you generally have to renew your mortgage every 1 to 5 years, so your rate is likely to change throughout the term of your mortgage. You can always shop around for different interest rates. Just make sure it's with a reputable bank or mortgage broker. I like using a mortgage calculator to see how much my payments would actually be under different rates or if I make an additional payment. For this example, I put 400,000 for the mortgage amount, 30 years for the length of the term, 4.3% for the interest rate, and when I calculate that, it is $1,971 a month. You can click on Create Personalized Mortgage Report. This gives additional information. It shows the amortization graph from year 1 all the way to year 30. It shows your payments made, the interest paid, the principal paid, as well as your balance. You can see that the interest paid gradually goes down over time, and the principal paid gradually goes up over time. All the way down to the bottom, it'll give you your totals. So the total payment made, the total interest paid, the total principal paid, and then you can't wait to see that lovely zero for that nothing is being owed and your mortgage is completely paid. Every dollar towards paying down the principal of the mortgage is a dollar closer towards your financial goals.
Link, it's actually more than $1.
You are right, Marvin. It is more than $1 if you apply it to your mortgage. Right here, you can add a lump sum for payments. I'm going to type in that I want to add $1 a day. So I will make a $365 payment once annually, so once a year. This means that my mortgage will be paid off 11 months faster. Let's see how much I'll save. My total payments made without that extra $365 payment is $709,430. The interest paid, $309,401. The principal paid, almost that whole $400,000. The extra $365 in yearly payment makes a huge difference. Now my payments being made have gone down to $698,199. The interest paid has gone down to $298,201, and again, it's the same principal amount. Now that difference is $11,200 less in payments made and $11,200 less in interest paid. That's a huge amount of money saved, plus you're paying off the mortgage 11 months faster just by paying an extra $365 once every year. When you think about money in this way, it'll help you make choices in the present to save for your future. Any $1 that you spend now, you could save and put towards your mortgage, and that could save you $2 or more on interest. If you put it towards your mortgage, should I spend that $5 on coffee, or should I make it at home and put $4 to the mortgage? Should I spend $2,700 for a new garage floor epoxy, or should I put it towards the mortgage? Recently, I was tempted to get my garage floor re-epoxied. My dad had originally epoxied it himself as a housewarming present. It's been over 10 years now, and I really wanted it to be re-epoxied. I got a quote. I thought about it for a while, but then I came to my senses. I knew it was best to put that money towards the mortgage. Sometime in the future, I can get that epoxy floor. It would be great to have now, but it feels even greater to pay off that mortgage sooner. It's a huge accomplishment to pay off your mortgage and to be completely debt-free. Once this happens, you should plan a huge celebration to acknowledge all of the hard work you put into becoming debt-free. This is not about getting rich quick. This is about making years, and years of good financial choices so that you can be mortgage and debt free and have a safe financial future for you and your family.
Hoot, hoot.
Inflation is still sky high. If you'd like to know more, the video's up on the screen right now. I thank you all. I now have 39 subscribers and over 1,000 views for all of my videos. If you could please subscribe, like, and share my videos, I truly appreciate it. Save money, make good choices, and please be kind.